went to 10 different states, 33 parks, did physical due diligence on 3 parks that we have under contract. Going through my stats the other day, it was just under 17,000 miles flown, 3,100 miles driven. So it was a whirlwind tour.
Hello, everyone. My name is Gino Barbaro, and I have the extreme pleasure and honor today to be joined by my co-host, Jen U, the business manager here at Jake and Gino. Jen, how you doing today?
I'm great, Gino. How you doing?
Jennifer, I don't know what to expect from this podcast. We got the COVID guy here on the show. He's been bouncing around for the last 6 weeks. He's on lockdown right now. He's an ex-Maine person, moved to Hawaii. Jennifer, what can we expect from this show? I don't even know what to expect. This is going to be a lot of fun, huh?
I think Ryan has done it all. From what I understand, he's a make it happen guy. So we love those guys.
So today's guest is Ryan Murdock, VP of Acquisitions with Open Door Capital. Ryan spent 10 years in the electronics manufacturing industry before transitioning to real estate investing and property management in 2007. He has extensive management experience in many facets of real estate, including retail, office, multifamily, HOA, and especially mobile home parks, including nationwide consulting and turnaround projects. He's a licensed real estate broker since 2008. We won't hold that against him. And owns and operates his own portfolio of residential rental properties, in addition to Open Door Capital. Without further ado, welcome to the show, Ryan. How you doing?
Hey, I'm great. Thanks for having me on. You know, you sold me on the Jake and Gino show, and now I get the Jen and Gino show, which is probably even better. No offense to Jake, but I mean, this is you guys are just full of surprises, man.
Dude,
Thank
we're
you so
upgrading.
much.
We're upgrading. The only thing you need a picture of yourself in the background. You got to get those pictures of yourself.
I haven't hit that level, man. One day, I hope I'm important enough to have pictures of myself on the wall behind me. But right now, I'm in an office that doesn't even belong to me. So.
Listen, tell us your story. I mean, I met you a couple of years ago in New York. You said you're born and raised in Maine. What was the attraction to real estate for you?
Well, I was in electronics manufacturing for like 10 years. That was my day job, and I traveled and lived all around the world. So I lived in Singapore for a while, lived in Hong Kong for a year, ran around to Mexico and California and all over the place. And when I knew that was going to come to an end, I was just getting kind of burned out on living on the road all the time. I was looking for a change. I had a little bit of money, not much at all, but I was looking around just trying to figure out, what's next. And this being 2007, there wasn't nearly as much information as there is now. Like, all the podcasts, the online stuff just wasn't as advanced back then as it is now. But real estate investing kept coming up as people like that. And I'm like, well, that seems like fun. So I just really ordered a bunch of books. I was living in Hong Kong and went on Amazon and bought like Real Estate Investing for Dummies and all those books and read them, and moved back to the US, back to Maine, where I'm from, bought a duplex, which I house hacked, like live in one side, rent out the other, inherited some terrible tenants, got through that mess and just scratched and clawed to continue adding properties to my portfolio. So I went from 2 units up to about 50 or so units of my own in the first few years. Meanwhile, I got my real estate agent license and started a property management company, which I grew to roughly 200 or so units. So I did all that in like the first, 2 to 3 years of my investing career.
Wow. So once you did that, how did you end up moving to Hawaii from there?
Well, yeah, there was the period of, 10 years in between, kind of when I did that and when I moved to Hawaii. But during that time, I was, as I was acquiring my own properties, I found that while I had a lot of management experience, what I found later was I kind of had my blinders on to what I was just doing in my specific area and my specific field. And it was, I think, about 2016 that I stumbled on the Bigger Pockets podcast. And that really opened my eyes. And Gino, it's funny that we're talking now because yours and Jake's episodes was one of the first Bigger Pockets episodes that I had listened to. I mean, like one of the first 2 or 3, and it really, like, just hearing all the guests, and especially what you guys were doing, like, all these different strategies and things and subject to and syndication and all this crazy stuff that I had I wasn't even aware that stuff existed in my small multifamily, blinder world of Maine. Not that what I was doing wasn't good. It was just, there were so many other things. So when I stumbled onto the Bigger Pockets podcast, it's like, wow, what kind of world have I stumbled into here? Like, there was just all this stuff, and it really reignited my my passion for real estate. I was kind of getting bored and just like going through the motions, and really got fired up. And of course, got into the Bigger Pockets podcast, and there's a bunch of other podcasts that were going on. So I really got plugged into that world, and it really propelled me forward. It made me started to think differently, to invest differently, to look for different opportunities. And one of the things that came out of that was Brandon Turner looking for a mobile home park. He had some 1031 money that he was looking to park, and he decided mobile home parks were going to be the place to go. So he was advertising that he wanted a 50 lot park. He wanted public water, public sewer, and just so happens I found one in my local area that met that criteria. It was an off-market deal that I had picked up on from a local real estate meetup, just a casual sort of real estate meetup, small town meetup, 10 or 12 guys there. So I sent this park over to Brandon, thinking like, there's no way he's going to want that. Brandon Turner is going to want to buy a park in northern Maine, but he did. He liked the numbers. He came out, stayed at my house for a couple of days. We did due diligence on the park, and about a month later, we closed on it. And that was early 2018. The park's doing well. Brandon and I got to know each other from there, kind of built a friendship and a business relationship, where by the end of 2018, I moved out to Maui to help him kind of kick off this Open Door Capital mobile home park business that we're running now.
So let's talk about the Imma mentality, where I'm going to do this and I'm going to do that, right? How did you shed that? I mean, it couldn't have been just a couple Bigger Pockets podcasts, because it took Jake and I a long time to get out of that mentality, because you're in your comfort zone. You got 50 units, you're at home, you probably got some cows on the farm, having fun, right? And it's like, okay, all of a sudden, I got to do something different, because this is just killing me right now.
Yeah, it was. And, my wife and I have been looking for a change of scenery. I mean, I was at the point where I had my small portfolio. I had gotten out of the management business. I was just managing my own units. And by then I'd been doing property management on a larger scale for a long time. So I had some pretty good systems and I knew what I was doing. So just to scale back and self-manage my own portfolio really opened me up to be able to think about, hey, let's do something different. Let's look for some other opportunities. I'm not out just like trying to keep the wheels on the buggy of my own portfolio, which is what it was for 10 years, and I think anybody that's built any sort of real estate portfolio, like, you're all in, man. It's 24/7. You can't go anywhere. I'm not real good at delegating responsibility. So I was just doing everything myself, all the phone calls, everything, so when I got to the point where I was like, hey, I can take a breath, I can look around and do other things, I was just very much more receptive then to a change than I would have been otherwise. So when the opportunity came to move to Maui, it was really, I was only supposed to go to Maui for a week to help Brandon. He just bought a house out here and just needed some help, like getting settled and doing some things. And just immediately fell in love with Maui when I came out here. And we quickly cobbled together this plan where I was able to do some work for him, do some work for Open Door Capital, do some work for Bigger Pockets, and went from, it was a pretty drastic change for me in a sense that I'd just been so entrenched in Maine and my own business. And now all of a sudden I was like, you know what, I'm out of here. We're going to go do something different. And we've been able to scale tremendously from there.
Yeah, but that's what I'm trying to say. Like, what was that aha moment, that epiphany for you? Because I guess I can give you my story in like 10 seconds. My aha moment was I was doing everything, right? I was selling my product. And all of a sudden one day I'm like, I can't sell. I suck at selling. So I hired a guy named Josh, and Josh comes on, and all of a sudden we start building some systems, and I start letting go of a responsibility. And Jennifer would know this. I was packing books, bro. I still like to do it every now and again. I go back to the dark side, and it's a hard thing. But I mean, for the entrepreneur to actually let go is really, really difficult. And that's when you make your first hire. What was it for you? What was the epiphany for you?
I think I just had enough. Like, I just had enough. Like, it was more just a quality of life issue. And I think a lot of it, what it was is, I read 4 Hour Workweek, 3 or 4 years ago, whenever. And just that book had such an impact on me, where you don't necessarily, it made me open my eyes. I don't necessarily have to be hands-on on site all the time to do everything. I can create systems so that I can run my business from wherever I want to run my business from. And I remember I took that's what prompted me to go down to Darren Sager's meetups in Manhattan. That was being advertised like on a Wednesday night. I can't remember if I got an email or where I heard about it, but like, hey, Wednesday we're having a meetup in Manhattan. It was right after I'd read 4 Hour Workweek, and my normal reaction would be like, oh, Wednesday, I can't go to New York. Like, why? And then I said, wait a minute, why can't I? It's a 40-minute flight. It's like 12,000 frequent flyer miles. It's not even going to cost me anything. Get a night in a hotel, and I'll be back. And I was still answering my own phones from the tenants and doing all that stuff, but I had the number forwarded to my cell phone to an answering service. I had a maintenance guy who could, handle any emergency. So like that was kind of an aha moment that, hey, I can leave town and nobody even knows or cares that I'm gone, and my business continues to do what it's doing. So like that one overnight trip led to like spending my wife and I went to Thailand for a month, and same deal. Like nobody even knew I was gone. I had all the systems set up and my business ran flawlessly without me. And it's like, hey, wait a minute. I don't necessarily need to be, with my sleeves rolled up all the time. I still like to keep my finger on the pulse of what's going on. When time allows or when motivation allows, I like to actually do hands-on stuff, but I don't need to be there all the time. So that was really the kind of the changing moment.
Can you share a couple of systems? I mean, systems, everyone thinks of systems are these big, complex machines. Yeah. Can you just give a couple of systems in real estate specifically to your business that really, I mean, for us, I'll give you an example. Google Docs, Google Sheets, systems. Every time we have a process, let's say we want to hire an employee, we're going to do the scope of work for that employee. That's a system. So when that employee gets upgraded or goes up, hey, we already have it. This is who we're hiring.
Sure. Yeah, no, I mean, today with Open Door Capital, we're using, the Google Sheets, Google Drive, Asana. So everybody's really connected. But even back then, when I started really stepping back from property management, what allowed me to do that was simple things like a Google voice number. So instead of the tenants calling my direct cell phone, they would call a Google voice number, and I could redirect that Google voice number either to my cell phone if I was available, or maybe if I had a guy on call for a weekend, I would direct it to his number. So no matter what, the tenants called and they got somebody. Right. And I went through a phase where I had an answering service. So when the tenants called the same number that they always called, it would divert to an answering service. And the answering service had a list of instructions. If it's this, if you got a toilet leak or whatever, you dispatch the plumber. If it's a fire, call 911. Like they had all their things that they would do so that I didn't have to be involved. Bringing on rent manager to manage my units was huge because I had everything in an app on my phone. So I could dispatch vendors, I could dispatch service contractors, a maintenance guy to go out and fix something. And when he got there, he had an app on his phone that was tied into Rent Manager, so he could log his notes and what he did and upload pictures. So I was really able to just manage this thing from anywhere. So without even those small systems, there's no way I could have done that.
And how did the idea of Open Door Capital come about, and what is that company turned into?
Well, Open Door Capital that's Brandon's company, and it was his vision to focus solely on mobile home parks. And there's a lot of reasons why we like mobile home parks, but I think his overwhelming decision was like, you just have to pick one thing and go with it and be really, really good at it. Because he could have chosen anything. We could have done apartments or self-storage or parking lots or any number of things. But it's his tendency and mine, and I think a lot of other people's, to have shiny object syndrome, where you just want to kind of do everything and like, oh, let's run over here and do this and run over here and do that. And that tends not to work real well. So we said, okay, we're going to be, he said, we're going to be all in on mobile home parks. Here's why we like them. And then I was just totally on board and along for the ride.
And so what is the criteria for mobile home parks? What do you like about them, number one? And what are you looking for in a deal? What's your criteria for
so we like them. Really, we think they're as recession resistant as any asset class can be. And I've managed all sorts of asset classes from high end, low end, everything in between. And what I've seen is in a down economy, it's more or less the higher end stuff that gets hit the hardest. Usually, I mean, there's exceptions to all this, of course, but in the rental world, the pricing on the higher end stuff tends to get hit the hardest, and then people tend to move down maybe a class in housing. But when you're dealing with workforce and low income housing, like that's really it. I mean, there's nowhere else really to go below that. So the demand for that can even increase. And I remember back in 2008, 2009, when the sky was falling, I managed a lot of C-class rentals, and the monthly rental prices for those units actually increased by like 25 or $50 a month because the demand was there. The high end stuff was getting killed, but the lower end stuff, there was tons of demand for it. So we like mobile home parks for that aspect. And then the real reason we like them is just our ability to add value in a way that you really can't do with apartments or any other asset class. So our target parks right now, we're looking for a minimum of 100 lots and public water, public sewer, just for ease of management. But what we really like is our parks that are, say, 60 to 70% occupied. So we'll buy those parks on existing cash flow, and they typically operate well and efficiently, like right out of the gate. But if we have the ability to take that 20, 30, 40% vacancy and bring homes and fill those lots, that's the key to adding value. So unlike with an apartment, if you want to, again, there's exceptions to all this, but with apartments, typically you go in, you have to renovate the units, and you're putting 5, 10, 15, 20 grand, whatever it is, into renovating them, and then cranking the rents up and hoping you can get that and hoping you can sustain it, which in a lot of cases you can. With mobile homes, just the fact of bringing in a home and adding it to a lot that is vacant, and now you're activating that lot rent at $300 or $400 a month, like that alone, every lot you bring into service adds tremendous value to your park. So yes, we're doing other things throughout the park to beautify it and improve it, paving roads and improving signage and landscaping and aesthetics, but without having to really renovate any of the units or do anything hands-on to the existing units. Just every time we bring in a home and fill a lot, it adds value. So a lot of the ways that we do that are ideally we want a tenant to bring in their own home and set it on a lot, but typically we won't live long enough to see a park filled just naturally like that. There just aren't enough people moving their homes in. So we'll go out and we'll buy the homes, whether they're new homes or used homes, bring them in, get them set up, and then sell them off to a tenant. And a lot of times with the used home, if we're not even really looking to make money on the sale of the home, if we can break even, if it costs us say 15 or 20 grand to bring in a used home, renovate it, get it set up, if we can break even on that sale, or even if we lose a couple grand on that sale, we've activated that lot rent. So we're bringing in $300 or $400 a month. That almost goes directly to the bottom line because there are not a lot of expenses associated with that. And then that like I said, for every lot, that increases the value of your park. So we love that.
So the management is less on these assets also, correct?
Yeah, generally it is. We're targeting, ideally we want all tenant-owned homes so that we only own the lots. The tenants own all of their homes, so they're responsible for their own repairs and maintenance. Everything that goes on with the home, they're responsible for. It's not typically how you buy a park. There's usually almost always some level of park-owned homes where we, much like with an apartment, we're responsible for the interior maintenance and all that.
Yes.
But the goal is to get as many of those transfer it onto tenant ownership as possible, either by selling them directly to the tenant. We've seen some operators just give the homes away to the tenant. We've seen some operators tell a renter that, hey, you're either going to take possession of this or we're going to evict you. We don't like that route. Typically, we'll let a renter, we'll give them the option to take or buy the home, but if they're really resistant to it, we'll let them live out their occupancy. And when they move, whether it's next week or 10 years from now, we'll let them continue renting. But once they've moved out, we're not going to re-rent that home. We'll only sell it off.
I love that. Can you give the paint a picture for the audience? What's your life been like for the last 2 months?
For the last 2 months?
Yeah.
Well, in Maui, it's been great. The COVID thing has kind of thrown everybody for a loop, and Hawaii's been very, very strict on what they're doing. So they've shut down almost all travel to the island. So it's economically devastating to all of Hawaii, especially Maui, because it's so tourism based that all the businesses are taking a beating. But from a resident standpoint, it's been great in terms of, like, there's no traffic, there's no tourists, the beaches are clear. I just recently went on a road trip.
That's what I'm trying to get on.
Due diligence on I went to 10 different states, 33 parks, did physical due diligence on 3 parks that we have under contract. Going through my stats the other day, it was just under 17,000 miles flown, 3,100 miles driven. So it was a whirlwind tour, which I absolutely love anyway. And it was really productive, just the fact that we have so much stuff under contract and we're out shaking the trees, looking for new leads. But now I am back in Maui, but I'm subject to this quarantine. So I think I'm on day 3 of the mandatory 14-day Hawaii quarantine. So it's a good thing you got me now. If you got me on like day 12, 13, I don't know what I'm going to look like by then. It's going to be pretty haggard.
So, anyone out in Maui out there, if they want to take out their camera, if they see Ryan outside, just snap a picture and just start sharing that picture. So
yeah, at this point I can still pretty much string together coherent sentences, but I make no guarantees how that's going to degrade over the next couple of days. So I'm pretty active, man. I like to get out and do things. It's a beautiful place to live, and there's a lot of things to do. So I don't know if I'm going to be able to stay confined to my house for another week and a half.
How are you guys getting deal flow right now in this tough market?
Any way we can. So obviously the easiest ones are broker relationships, and we've got, it's a pretty small industry with mobile home parks. There's only so many of them, and there's just a handful of really top performing brokers. So we're building relationships with all those guys. And that was a challenge. I mean, a year and a half ago, whatever, when we just started. Now, myself, Brandon, all the members of the general partnership have many, many years of experience and thousands of apartment units and some mobile home parks under ownership. But as Open Door Capital in its current form, we were a new company. So it was a little tough at first, just without the track record and without the reputation to have brokers or anybody take us seriously. I mean, they all knew us individually, but for those that, for the few that didn't, it was tough. You know, nobody kind of knew what we were able to do. But now that we've been able to close on some parks, we've been able to follow through and do what we say. We've seen deals, especially COVID-related deals, that a buyer backed out for whatever reason. Broker turned around and said, "Hey, look, this thing fell out of contract. We know you guys can perform. We want to take a look at it." So we're finding deals that way. We're trying to make a push for off-market leads. So like one of the latest things we've rolled out is the bringbrandonAdeal.com website, where we're tapping into what is really just a say unfair advantage, but I guess for me it's just the amazing reach and Brandon's platform with his podcast and with his social media, that he can reach a lot of people. So we did the bringbrandonAdeal.com website, which is really trying to get all of his audience to look for parks on our behalf. And for any park that gets any off-market lead that gets submitted to us, we'll pay that person a $50,000 finder's fee. And they're not putting it under contract. They're not negotiating. All we need is a warm intro to the seller. And if we close on it, we'll write that person a check. And that's really it's been a great tool for, we're not necessarily targeting the professional wholesaler, although we have wholesaler relationships and we're working that as well. But what we're looking for is just, I mean, there's so many people out there that follow Brandon, listen to his podcast and his things, that like, we're looking for the guy that, maybe heard at the 4th of July picnic that his uncle's buddy was selling a park. And like, we want that guy. And that person not being a professional wholesaler, and maybe, they've got a day job, or they're a newer investor, to get a $50,000 check for just hooking us up with an intro, they're thrilled, right?
Yeah.
So that's really brought in a lot of leads.
That's awesome. Before we get to the short answers, I really want you to just give your story of how a person out there wants to get into real estate. What would you advise them to get into real estate? Because everyone's heard it. Great apartments, mobile home parks. What do I do? I mean, how do I get into real estate? How do I start?
It's tough. The biggest advice I can give anybody, and I say this over and over again, is just stay engaged. I mean, you're not going to accomplish anything just sitting in your house. And every day that you can do something that puts you in and around other real estate investors or people that are doing things that you want to do that. So like for me, it was meetups, going to Manhattan. It doesn't have to be something where you jump on a plane and go to a meetup. There were just no meetups in my area. So I went to that one, and I formed relationships at that meetup. And then later on, somebody in my town had actually started a meetup, so I was going to that. And that's where I found the mobile home park that Brandon latched onto and where we met. I didn't do anything extravagant. I just got out of the house. I just went and did things. So stay engaged. So, listen to podcasts, go to meetups. Go to there's a million different Facebook pages and whatever asset class you want. Like, stay engaged. Just stay engaged. Put yourself in front of people so they know who you are. Don't be annoying with it. Don't be pestering people and asking for way more than you're giving back. But stay in front of these people, because opportunity will present itself. You just have to be there. And it's not easy. It's not easy. It's persistence.
Mm-hmm. And if you don't have a meetup in your area, you create a meetup. You start your own meetup.
Start one, exactly. Yeah. And that, like in Bangor, Maine, like it was me and one of my investor friends. We were fairly sophisticated investors for that area. And we were like, yeah, we got to start a meetup. And we just obsessed for months. It's almost analysis paralysis on like, where do we have the meetup? Who, do we have guest speakers? Do we have food? Like, how do we do this? And we just kicked this thing around for months. And all of a sudden, on Bigger Pockets, somebody had posted, some guy we'd never even heard of. Like, hey, I'm having a real estate meetup in my living room. We're like, what?
Yeah.
Like, do we go? Like, we got to go, right? So, like, I remember just like standing across the street from this guy's house, like trying to see what's going on in the window before I went in. But it was awesome, because this guy, he didn't even own any real estate at the time, but he's doing exactly what I'm now encouraging people to do. Is like, if there isn't a meetup and you need connections, you need to start, host one. He did that, and now 3-4 years later, that guy he's got a pretty good portfolio. He's well connected in the community, and he's up and running. But if he hadn't had that, the ambition or just the balls to say, hey, I'm going to have a meetup, even though I'm a newbie, like, he never would have had any of that. So I mean, it's a great example. Just stay engaged.
I love that tip. Let's take a quick time out to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of.
And we're back. Jen U, some short answer questions?
Absolutely. So Ryan, I want to know, what is your best habit for success?
Persistence. I'm just that little battery operated car that just keeps smashing into the wall and just turning around till you get to where you want to go. And it's not my path to where I am now has definitely not been the most efficient at all, but I just tend not to give up and keep doing it. So, and I'm not encouraging other people just to smash into a wall repeatedly, although that will happen. But looking back, if I had to do everything all over again, of course I could do it in a much shorter span of time. So I would encourage people to and this kind of ties in again to staying engaged, but find people that are doing what you want. Find a mentor if you're able to, somewhere you can add value, and learn from other people's mistakes and try to get as much guidance as you can, whether that's direct or through podcasts or books or whatever. But whatever problem that I have faced or anybody else is facing, somebody's faced the same problem before, and there's an answer to it. So sorry, that was not a short answer. I apologize.
No, not at all. Not at all.
Ryan, what's your best tip for someone to start scaling their business?
Partner with people. And I've learned that firsthand just with Open Door Capital. Is we are now tackling deals, taking down things that there is no chance I ever would have been able to take down. And I don't care if I lived to be 150, I don't think I would have been able to scale and network and gain the resources that I have today. So partner with people that will help you scale. And it can be difficult. You don't want to just partner with anybody. There's a certain level of trust, and you want to make sure everybody kind of has the same core values and the same ambitions that you do. But we have a team now, I think it's eight or nine of us on the Open Door Capital team. Everybody excels at their specific roles. We all get along great, which certainly helps. Everybody trusts one another, but they're all rock stars. They all work hard, and together we certainly have accomplished more than any one of us could have achieved on our own.
I'm going to throw a wrench in there, since we're both on operations. Give me your best operations secret for success. I mean, I know you mentioned Asana, but what do you do for operations?
Operations, it's more, it's communication, definitely. So, and I've done this even before real estate. If you go back to my electronics manufacturing career, it's kind of something that I was brought up with through the ranks, and something I continue to do. But I think it's very important that your entire team touch base as a group. And right now we do it weekly. We have a weekly Zoom call where everybody's on it. We just air whatever issues that we think are appropriate for the entire group. Of course, during the week, there's all sorts of one-on-one conversations and specific things that are happening, but to make sure that everybody feels included, everybody at least touches on and is aware of what everybody else is doing, helps keep everybody on the same page. And as part of that meeting, we all have our sort of individual goals that we talk about in their week-to-week goal, where, hey, we'll go on the call and say, hey, this was my goal for last week. Either I met it or I didn't. If I didn't, here's why. Here's my commitment for next week, and kind of set that goal. And all of those goals align to our overall company goal. But I think without that scheduled, regimented communication happens every Thursday is our meeting. Like, if we don't have that, then I think people just have a tendency to lose touch with what's going on. And by forcing that weekly call, it just brings everybody together every week.
No, I love that. Definitely stealing some of that. What's your favorite book of recommendation for the audience?
I'm not a great big. I mean, I'm like the best guy at reading half a book and then just like never going back, no matter how good it is. I already hit 4-hour work week. What I did read just recently, this little gem, which I'm not just doing a shameless plug. I thought this was a great book. Number one, because it was short enough that I could read it in one sitting, and I couldn't abandon it. But it's great because it's short, it's to the point, and you guys didn't sugarcoat anything in this. The story is a guy that had his whole mindset changed, and he decided he was going to do something else, and he did the other thing. But even then, it wasn't all just roses. Like, every time this guy did something, he got punched in the face once he was up and running, which is great, because that's what's going to happen in real life. Is like, at least what I've found is I'm continually getting punched in the face by something out there. And I don't think there really is any true like passive income. I'm never going to have to worry about it again. If you're one of those people, and I am, that like wants to continue growing and wants to continue doing things. So I'll get one thing under control, or one stream of income under control, and one task under control, and I'll go tackle something else. We'll build that up, and you get punched in the face, and you keep going. And like I just thought there were some really great lessons in this book. Because it's a short read, it's easily digestible. It's great for a newbie or anybody just kind of looking to get into the space without overwhelming them with some giant book.
So as Mike Tyson likes to say, we all got a plan until we get punched in the face, right?
Yeah.
And the thing is, you get punched in the face enough, it doesn't hurt. And it's like, okay, another one of those. There goes another. And it's just, you build up the tolerance. And that's I always say done is better than perfect, because people think I'm crazy. Like I was on the call with one of the guys this morning, and he's like, what do you think about this? I said, good, let's do it Thursday, send it out. And he's like, I'm like, you want to do it? What's the sense? If it doesn't work, we learn a lot quicker that it doesn't work. And if it did work, great. We implemented it sooner. And that's just by having confidence and by taking the chance and by knowing that I want everyone to listen to this and write this down. Everyone out there is winging it. We are all winging it out there and figuring out. There's nobody out there that really knows what the hell is happening, what's going on. It's the people who are persistent, who are willing to get punched in the face and say, it's going to leave a little bit of a mark, but I'll get over it. And the next one I take is going to hurt a little less. So I agree wholeheartedly with you on that.
Yep, absolutely.
And for our podcast audience, Ryan was holding up a copy of Jake Gino's book, The Honeybee.
The Honeybee, that's right.
Yeah, great book.
Ryan, what project are you excited about now? I know you went on your due diligence whirlwind tour. What project excites you?
That stuff probably excites me more than anything. I do a lot of things for Open Door Capital, and I often joke that I don't do anything exceptionally well, but I can just kind of do a little bit of everything. But what I enjoy the most is still it goes back to my sort of hands-on, like the due diligence trips. I love those the most. I love jumping on a plane. I love diving into a property, especially if it's one that we've spent a lot of time underwriting and looking at pictures and all that stuff, like to actually be there on site and, to do all the inspections, and you get the guy there with the sewer line camera, and you're going in the homes and you're interviewing the manager. Like I love that kind of stuff more than anything. So just coming off that trip where I did 3 of those back to back was pretty good. Now I'm just trying to decompress and organize all my thoughts and notes into some semblance of thing in Asana so that I'll be able to look back and refer to them. But yeah, absolutely. That's my favorite part of this job.
That's awesome.
And where can our listeners get a hold of you?
I'm pretty active on Bigger Pockets, or you can shoot me an email at Ryan, RYAN, at odcfund.com. Either one of those two. Or Instagram, you can find me at ryan.murdock21, but I typically post like more scuba diving related pictures and goofing around when I do real estate stuff, but I think it's fun.
That's awesome. So I want everyone to picture this. 2007, I guess electronics, 10 years, gets into real estate, builds up the portfolio to 50 units. The Imma mentality. I'm going to do this. I'm going to do that. He's getting burned out. It's 2016, and he hears these 2 jabronis on a podcast on Jake and Gino. He's like, this pizza guy and his drug rep, these guys are actually doing it. What the hell am I doing wrong? If these guys can do it, I can obviously do it, right? So that's the amazing thing. I think everybody out there, like I said, we're all committing and we're all winging it, right? And that's the thing. And I think once Ryan got the clarity to say, you know what, I'm getting burned out. There's a different way of doing it. Why am I living in my little tunnel in Maine, doing my own thing? There's so many opportunities out there. And oh, by the way, why can't I get on a plane and fly to New York? It's only 40 minutes and step out of my comfort zone and realize that there's so much more to do out there. And, growing to that. And then all of a sudden, reaching out and saying, hey, do you want to buy a park, Brandon? And taking that big leap, that must have actually, he must have wanted to throw up after he did that, right? But he actually ended up doing it. And that was the big opportunity. And that led to actually partnering, leaving Maine for like the 3rd time, as he said, going out to Maui, getting situated there, and then doing this due diligence whirlwind, which is important, everybody. This is what make it happen means. A lot of people are hunkered down. They can say, you know what, if I leave, I got to come back, I have to quarantine and make the excuses. There's no excuses out there. It's time to make it happen. 17,000 miles, 10 states, 33 parks, 3 due diligence. That's a lot of stuff, man. People don't do that in a lifetime. He did that in 2 freaking months during a shutdown. So all I'm saying is it seems pretty, but there's a lot of work to Ryan's journey, and it's just beginning right now. I mean, hopefully COVID opens up, and if it doesn't open up, he's still great down there because he took control of his financial future. He took control of his destiny. He moved to where he wanted to, and everyone's going to say, oh, he's lucky. Luck has a lot to do with it, but the harder he works, the luckier he gets. That's, to me, the moral of the story, and willing to stay out of your comfort zone. Did I miss anything there, Ryan?
No, man, you covered it well. Thank you.
what I'd like to know is, like, really, where do you see yourself? Where do you guys see yourself going? I mean, you're talking about thousands and thousands and thousands of units going from 50. Like, how does that resonate with you? I mean, how do you feel about that? That's a pretty amazing task, isn't it?
Yeah, no, every day I need to pinch myself that I'm not dreaming. I mean, if you just look over the, my past 15 years and going from, listening to these quote unquote celebrities, Gino, you included, like on these podcasts, and now here I am working and talking with these people on a daily basis. It's really, I mean, I'm just so grateful that I've had the opportunities to do this stuff, and I'm excited for what the future brings. I do feel like we're just getting started. Mm-hmm. We're targeting 50 million in acquisitions by the end of this year, and I don't see us slowing down after that. I mean, we're just getting warmed up, so I'm very excited about the next few years.
All I gotta say is just keep getting punched in the face, man. It starts to feel good after a while. You start to expect it. You can duck a little bit. You get better at ducking.
Bob and weave, man. Bob and weave.
Jen, any final words, Jen?
No, I loved learning about Ryan's story, how you incrementally got better, like the property management to getting your broker's license, now working with Brandon and the Open Door Capital team. I just love listening to your journey.
Yeah, and it's been an honor being on your first show. Clearly, you're the one that's going to be carrying the podcast at this point. So I'm glad to be here for your first breakout episode. Thank you.
We want to thank you for being on, honestly. And like, Ryan, give out your email again. So if anybody wants to reach out to you, they can.
Ryan, RYAN @ODC Fund. And you can go right on ODC Fund and check out our bios, the whole team, and our offering stuff, and anything about the company is all right there on the website. So yeah,
that's great. We want to thank you for being on the show. And until next time, hopefully Jen U's on the next one. Let's bring the pain, everybody. Take care.
Thanks, guys.
Bye, everyone.